He's in. It's the Labour government. What's going to happen next for you as a property investor? Well, let's discuss in this video. The election has just happened, and I want to share with you my 5 crucial predictions in terms of what is going to happen to you as a property investor. And is it game over or is it game on? So let's deep dive into this. The first part is understanding the property market. Now, you can notice that there are 7 stages of the property market cycle. On the x-axis, we have the timeline, and on the y-axis, on the vertical, we have percentage property price change in investment areas. And that is key, by the way. So my view is we are right now at stage 7. How do we know we're at stage 7? Because the trigger point has happened to understand that we're actually at the first point in the bottom of the property market. Now, let's assess the bottom of the market. The bottom of the market is actually made up of 3 phases, something that many investors aren't aware of. And the first phase is the contraction phase. The contraction phase is the maximizing phase for investors, for entrepreneurs, for people like you and I that want to jump in and we want to maximize whatever we can do in the time frame that we have. I say the time frame that we have because the contraction phase doesn't last forever. The contraction phase is a maximum of 9 to 12 months. Now, after the contraction phase, there's the second phase. And the second phase is what we're calling at Premier Property the stagnation phase. Now, in the stagnation phase, professional investors have more confidence and more confirmation, and they pay for that confidence and confirmation because the first mover advantage people like you and me, have already got in. We've already created our discounts. We've already got in at good interest rates. All the stuff I'm going to share with you as well because you learnt the knowledge and you're moving forward and you're gaining experience. Then we have the third phase. The third phase is the expansion phase. Now, of course, we remember we're discussing here UK property. And in UK property, investors will always understand, even in a recession, even at the bottom of the market, that UK property is very good. It's the best type of property you could buy in the whole world when it comes to safety, security, knowing that the private rental sector is very much needed, all of these reasons. So the expansion phase also happens when all of the normal people jump in as well. Sorry, I'm interrupting your video that you're watching so keenly. Now, I just wanted to say that on this platform, I can't share everything. There's a lot more information that you need to know and you need to be able to apply and really find out what is going on. So if you want to get the unfiltered version of all of this, well, you can actually download it here right now. Now, the thing is, you've got a link here. You can click on the link and you can get the full uncut version right now. I'm only going to make this available to 100 people. It's the first 100 downloads, and after that we're going to have to take it down because we don't really know who's watching, and it's for the first 100 people. This platform won't allow me to share the things that you really need to hear and assess and deal with and move forward in property. So you can get this right now by clicking on the link. First 100 people. Please carry on watching the video, or you can download this right now. Now, like what I say, if you are in the first phase, well, by the time someone gets to expansion phase, you are already quids in. You've already made your money. Your financial freedom is already done. The further things to be aware of is that there will be areas that will flatline. So it's not about investing just anywhere. You've got to know your specific postcode. You've got to learn about this. You've got to learn the specific postcode that will work for you. And in these specific postcodes, you will find that there are some areas that will just flatline and there are some specific postcodes that will continue to grow. So how can you identify growth areas in a declining market? You can use very credible tools like HomeTrack. HomeTrack is used by over 70% of the valuers to actually assess valuations. So here you can see HomeTrack's data, and you can notice you got last year and you got this year here. This is actually measuring the regional cities within HomeTrack, and it's actually showing you the annual percentage change in house prices. Now, there's actually 3 ways of you buying property in these types of areas. You can either buy properties which are actually going down in value. That really, in my view, is a little bit of gambling, which I don't suggest. Or you can buy properties in flatline areas, and in those areas you can force up appreciation. However, if you want to do it the best way possible, you can identify micro areas that are still buoyant and still growing. And you can use charts like this to actually help you to assess these areas. Now, with the HomeTrack report, what you're assessing is the positive trend. Birmingham, for example, if you notice, in 2023, it was a decline of minus 0.6%. However, this year you can notice that it's in the green, it's in the positive now, and it's gone up. So you're not buying falling daggers, as it's known in the commercial world. You're buying properties that are going up in value, even in a declining market. Now, with the current government, rents are a real concern because the cost of living crisis is going to increase. People that aren't investing in property, there is going to be that cost of living crisis that's going to hurt them. Now, when you look at this chart, you can see and assess that rents are the biggest payment that your tenants are going to have to pay. And of course, if you're buying properties and you're holding properties, or even if you're buying properties and selling them, someone's got to be able to pay that mortgage, someone's got to be able to pay that rent. And our responsibility is to provide that roof over their heads where they have good functional properties and they are able to pay their rents. And of course, if someone doesn't pay the rent, well, there's your cash flow gone. You've got to still pay the mortgage, you've still got to come up with the finance. The mortgage company doesn't want to know about that. They want to know that you pay that money. So let's discuss what you can actually do to make sure that your rents actually get paid. And remember, you've got to work with people because it's just regular people. They've got to find the money from somewhere. So it's our responsibility to help them, to help themselves, to make sure that the rent does get paid. So first of all, you want to check in, if you're dealing with letting agents, that your rent has come into the letting agent. As long as it's coming to the letting agent, you know you're safe. Letting agent might pay you in a week's time or 2 weeks' time or whatever the system is that you're working with them. But the point is the rent will actually come in. That's the part that you want to check in with. So if you've got one property or a number of properties, then what you do is you make sure you contact the letting agent on the dates that the rent's meant to be paid in and make sure that the rent has come in. If it hasn't come in, you need to be nimble and sharp to make sure that the letting agent is doing something to get that rental in. Because you know how it works, right? One day turns into a week, week turns into a month, and before you know it, the rent arrears is in 3 months. You nip in the bud any late payments. So you start it from the rent date. So you can actually put in some rent guarantee processes in place. Now let me share some of the best ones that we found to be useful. Now one of them is Let Alliance. So Let Alliance, now what do? They work with intermediaries, they work with the letting agent, and what they will do, if your tenant is has come on hard times and they're struggling to pay the rent, but they want to pay the rent, they're just struggling, Let Alliance will come into place, and Let Alliance with the letting agent will mediate with the tenant. It doesn't involve you. That's the key with this. They will mediate that process to make sure that there's a rent plan and the rent comes in the time frame that the tenant can pay that rent in. The point is, it's much better than the tenant getting evicted and you having no tenant. And of course, why would you want to do that to someone who's already struggling, right? So I'm a little bit opinionated. Why not work with them and help them out while you help yourself as well? It's a match, isn't it? It's a win-win situation. So let's go deeper together. Let's now discuss what more you can be doing. Now, one of the things that we're now putting in place is security right at the beginning of a tenancy. So what do I mean by this? So right at the beginning of the tenancy, we're now asking mandatory, we want a guarantor for the tenant. Now the challenge that you're going to have is that some people are going to have guarantors and some people aren't going to have guarantors, and they can be very good tenants. Their referencing would be absolutely fine. However, they haven't got a guarantor. And out of our principle in our system, we've put in that you must have a guarantor, which means you get less people who could be very good tenants for you that you're taking on. So one of the things that we've also started doing at Premier is we've started using a different type of insurance, which is known as guarantors insurance. So what does this do? So if someone is a good tenant, they reference well, you like them, and you know they're going to be a good match for your property, and you want to let them into your property and provide a good home for them, what you can do is you can ask them to actually say, look, you don't have a guarantor. However, as long as you have guarantors insurance, we will accept you as a tenant, and you're welcome to come into our nice property that we've got here for you and treat it like home. Now, if the tenant can't pay the rent, what will happen is normally they will go to the guarantor and say, well, there's a rent arrears, or even worse, if a tenant leaves with a rent arrears, you can normally go to a guarantor. And in this instance, the insurance company acts as the guarantor. If there's maintenance required to that property due to damage, which is more than any deposit that you've taken, again, the guarantor's insurance also comes into place. Here's an example of one right now. Now, like I say, there's no affiliation with these companies. I'm sharing with you what we're actually using. So Housing Hand we find to be a good one right now. And it's much the same what I just mentioned there. Now you're enjoying this YouTube video, then why not be part of our community? Just click on that button, there's the bell icon as well, right? And engage with our community. And I'll be sending out lots of videos like this, which are very informative. I hope you find this very useful. So we will keep you informed so that you can move forward in your property journey. Yeah, and if you've got any comments, I'd love to hear your comments and your views, by the way. So if you've got a contrarian view, if you've got a different view to mine, or if you confirm, then add it in the comments box. Don't be shy. You know, you're part of our community, and it'd be great for you to be part of our channel here as well. With this current government, rent controls are on the horizon. Now, when it comes to rent controls, Scotland is really a view into the future, because rent controls already came into Scotland. And let's assess what actually happened. The landlords started to leave because of the rent controls, and it really harmed investor confidence. Now, according to the PRS, over 220,000 homes actually were lost from the rented sector. So there's even more demand in the private rented sector. And what happens when there's more demand and not enough supply was that the rent surged by over 14.3% in Scotland. Although the government in Scotland were in denial. They were saying, oh, landlords aren't leaving the sector. When they were actually. Now, when rent caps come in, the rent caps usually come in from the current agreement that you have with your tenancies. So if you haven't already reviewed your agreement with your tenancies to find out that the rent is the right rent, the market rent, my suggestion is now's the time to review it. Now, look, your tenants are not going to like a rent increase. However, if you haven't increased the rent for a while, to be fair, what you're doing isn't fair to you either, is it? You know, and anyone in their right mind, although they won't like it, you know, every tenant understands that if there hasn't been a rent increase, that they know what the market rents are. They know that you've been a good landlord, haven't increased it, but it's now time. There's a cost of living crisis for them, and there's a cost of living crisis for you. So if your tenancy is showing a lower rent, the rent cap will be from that lower tenancy figure. If you've increased your rent, the rent cap is going to be a percentage from that current tenancy that you now increase the rent on. You will find that any rent cap will still allow an increase in rental, and that typically is around 3%. So the retail price index is usually the measure for this. So usually around 3% a year will be increased, and in exceptional circumstances it will be 6%. Now, when you work this out, if you're like me, I don't increase my rents every year on year at 3%. Yes, recently there's been a bit more than that, but usually it's around that 3% mark anyway. So when you work this out, these rent caps, where they still allow these increases in the correct investment areas, and that is crucial. Now, the rent caps, they ended on the 31st of March 2024 because the government did a U-turn. Do you know the government to have done U-turns before? Do you think they're going to do U-turns in the future? My view is, yeah, for sure. And there is going to be some seriously interesting policies that are going to be coming up. And I will be dissecting them for you and going through how you can navigate through them. Many of these policies that are going to come in are going to be, I'll call it, cloud cuckoo land policies, which don't really work in the real world. And the government will then find out 6 to 9 months later, and then they'll do a U-turn. And it's happened before, it's going to happen again. At the same time, there are going to be some serious opportunities for you to pick up really good stock, you know, in really good streets, in really good investment areas that just the tired landlords or the people who aren't upskilling just don't know about. Now, I've got a number of conspiracy theories, and I'll share with you one of them right now. Why is it that everything is being made so difficult for the small property investor? Yeah, when I say small property investor, that can range from, you know, your one property to, like us, a few hundred. You know, you're still a small property investor in the whole great scheme of things. Why is it that it's being made so difficult? Well, is it because the large organizations are muscling in? Is it because John Lewis is starting to build homes? Is it because the larger developers are coming into our environment? You know, and every small business, you can think about it, over the last 2 decades has gone, hasn't it? Yeah? Is it now the time where they are trying to get rid of the small property investor? Who knows? I can't say for sure. But what I do know is they are really squeezing the market. And if you're not that person who is continually professionally developing your career, and it is a career, isn't it, part-time or full-time, in property investing, well, it's game over. Now, many of the tired landlords are tired because they're not really moving forward with the legislation and all the things that you've got to adhere to. Yet it is actually very doable and workable for you to do that as well. So if you're professionalizing, my views, you're going to be fine. If you're not, the market is going to be getting smaller, and it's only professional people like you that are going to be able to stay the have-a-go people are gone, going, and will be going over the next 12 to 24 months. The marketplace is completely changing with this new government. If you're in the right investment areas, you're in the right postcodes, you have the right strategy for your property investing, well then you're going to be in good hands, you're going to be fine, you're going to professionalize, you're going to make this work. Everybody else around you who isn't is going to be falling to the wayside, unfortunately. That's what's coming up over the next 12 months. And this government is really putting that final nail in the coffin for those people. Now that we discussed the market cycle, now that we discussed rents and what's going to happen with rents, let's now jump into inflation. So my view is, and I can't confirm or deny this, but it's my view, is that inflation is being held back. I think the picture had been painted rosier because, RS wanted to get in. Yeah? And now we've got the current government, great they're in. Well, with the scenario is that the inflation is going to go straight back up again. It's like, think of it like an elastic band. It's been pulled back as much as it possibly can, and someone's got to release that elastic band at some point, and inflation is going near to double digits. Let me explain inflation in terms of property investing and how it actually becomes your friend. And you're hearing me correctly. If you've got £100,000 sitting in the bank, that £100,000 is going to be eroded by compounded figures of 63% over 10 years. Now the number will remain the same. However, it will be worth £63,000 less, won't it? In real terms. You'll be able to buy, the purchasing power will have dropped by 63%. So in real terms, it's only worth £37,000 of current money in 10 years' time, isn't it? Money that you got as a loan of £100,000 is also going to reduce in purchasing in terms of the power of what that money has by 63%. So the £100,000 of a loan in real terms is only going to feel to you like £37,000. So are we saying then, in a strange way, that that loan has actually diminished in value? And on top of this, let's say your property value that you're buying, I'm just going to use a £100,000 number. If you're buying that property at £100,000 in 10 years' time, by inflation, and inflation only just as one factor, that's going to go up by 63%. So your £100,000 property will be worth £163,000. And that will be a tangible number. If you're holding property and you're renting it, the same thing happens with the rental. So if the rental is £1,000 a month, just with inflation in a decade, that's going to be worth £1,630, isn't it? Because that power of money will have dropped, and inflation means that the number will actually go up. Now, higher inflation means that we're going to have higher interest rates, because one of the factors that counters inflation is literally the rising of interest rates. The European Central Bank have dropped their interest rates by 0.25% from 4% to 3.75%, and that only happened on the 6th of June 2024. And that was because of a decision by the Canadians to actually drop their interest rates previous to that, just one day prior on the 5th of June 2024. But not a lot of people know about this. In the following 12 to 24 months, what you're going to find is that interest rates are going to 9%. They're going to 9%. Now, the advantage that you got in is if you've got in the next 12 months, where you've got good deals and you've got good rates and you've maybe fixed them or whatever you want to do, I can't give you financial advice. These are some of the things that we're doing. Well, you're going to be in happy days, aren't you? Because you're going to find that your interest rates are much lower, typically 33% lower than most other people. The last time I shared this prediction, you know what happened? Interest rates went 3 to 6%, just like I predicted. And many people, I was mentioning to them that you have right now finance 50% discounted. What you've got right now is you've got finance that is 33% discounted. Because if the interest rate is 6% now, and in 24 months, not in 12, in 24 months is going to 9%, well then you've got right now finance that is 33% discounted, isn't it? Fifth part I want to share with you is the fact that there's going to be a lot of distressed sellers, unfortunately. Now, that's not on you. The distressed sellers are there, either they've bought properties without information, they've bought properties out there on fixed rates when they were low and now they're falling off those fixed rates. They've bought properties where they weren't strategic, didn't have information to do this properly. Now, where there's distress, entrepreneurs like you and me, we also find there are massive opportunities. Right now, 1.6 million people are falling off of their fixed rate mortgage terms, and they're coming to an end at the end of this year in 2024. And this current government that's just got in is going to make it even more difficult for them. So in the time that we have, I'm going to discuss with you more about repossessions. Now, repossessions, you will find these at auctions. You will also find repossessions at modern method of auctions, which is coming through estate agents, a different variation of auctions. And also you will find that estate agents are also being utilized to sell repossessions as well. And let me explain in more detail what is really happening that people don't know about. When you look at bank repossessions, the banks will have complex structures. And there's a whole hierarchy, and not just a hierarchy, there's a whole complexity on how they do business. Let me share an example with you. Now, LSL isn't just one brand. With LSL, you will notice there are all of these different brands, and they just don't do one thing, they will do many different things. And they also own a number of estate agencies as well. So you're going to be finding repossessions being filtered through their various different companies, and they end up with the estate agency arm or the companies that deal with the estate agencies. So they are self-feeding through the repossessions through their own estate agency companies. Skipton Bank, the third largest UK building society, owns multiple companies, and one of them being the Connells Group. Now, the Connells Group is a parent company which actually has 86 different subsidiaries when it comes to estate agency brands. So Skipton unfortunately has to repossess those properties because of everything I've just shared with you, what's coming up next. Then it gets filtered through their estate agency arm, if you want to call it that. It's separate entities, of course, through their various complex group structures, and it ends up in the estate agency. Remember that we are in the first phase of the bottom of the market. We're in the first phase, the first mover advantage. This is where professional investors like you and me jump in and really create their wealth, their financial futures, and to be fair, a legacy. And if you want to do a bit more, why not do a bit more, is what I say to myself. Money is a starting point. That's right. It's a starting point. Ain't the end point. Get started. Now, we've discussed 5 key areas of impact when it comes to this current government that's just got in. Property market, how the rents are going to be affecting you, also inflation and how it can actually be your friend. And we've also discussed interest rates, haven't we? And we've discussed distressed sellers and the opportunities that you've got coming up right now. So we're in the first phase of the bottom market, the best time you're ever going to get in 20 years. You are at stage 7 right now. And this government that's come in has actually helped you to accelerate your success. So don't be horrible to them. It's okay whether you voted for them or you didn't vote for them, or whether you didn't even bother voting, because it's irrelevant to your property investing. It's relevant that they've actually helped you to accelerate your property investment career. I hope you enjoyed that video. I've shared a lot of information, real details on what is really happening and many of my predictions as an active investor. Now, if you do want the uncut version, the full version, which is unfiltered with stuff that I can't say on this platform because they'll take this down otherwise, well, you can get it right now. You can click on the link below and you can grab the whole uncut, unfiltered version. Now, the thing is, I'm only going to make this available to the first 100 people that actually take action. And after that, we're taking it down and no one will be able to get that. So if you want to get it right now, now's the time to grab it, and I will see you soon on another video. Cam Devady helping you take your property investing to the next level. I'll see you soon.